Good morning, this is Tom Alexander. It is Sunday, September 26th, and we'll do our weekly review of the report that you have. Before I get started and before I forget, if you would do me a huge favor and like this video if you like it, if you find value. And if you have not subscribed to the YouTube channel, if you would do that, that would be much appreciated and very helpful. Okay. Let me show my screen. Okay, here are the four primary U.S. trading indices. These are the cash charts. I will occasionally use cash charts. I'll also show the futures charts, but really the levels on the cash charts are the ones that are most important. Frankly, you have a little bit more noise sometimes at the extremes in the futures markets. But the futures markets are a derivative of the cash market. And the cash market does ultimately hold sway, okay? All right, now the levels you see on here, they're both daily levels and some short-term levels. We are in varying degrees in the S&P, the NDX, and the Dow bumping up against upper key reference areas. The NDX is sort of the outlier here. It is lagging a little bit. It is a little bit below its ultimate upper extreme that I think is very critical. If we close above the levels that you see, the upper extreme of the levels that you see in the NDX, S&P, and the Dow, it's very, very likely that one or more will quickly trade to a new all-time high. Now, I'm going to go down in time frame, and obviously the most important intermediate term low is the low that we made last Monday. Now let's go down in time frame, and this will be immediately relevant as we head into the Globex trade and the trade on Monday. And again, these are cash levels. The spike low made on the 24th, the opening low is a spike low, is important shorter term. And then below there, I have the levels highlighted. That's volume on the horizontal scale. Those levels are important. Now, if we're back in the rip phase of this market, which is the dominant phase of the market and has been the dominant phase of the market since the March 2020 low, really shouldn't see this market close below these levels, the secondary levels that you see below here. If we take out below the 24th, okay, but you really shouldn't close below the low of, what is this, the 22nd? I think that's the low of the 22nd. You can see this, the areas I have highlighted on the screen here are really important, okay? All right, let's take a look at the profile view of the indices. And, I have basically split out the profile for those of you that may be new. People find me because of market profile, but as I say all the time, I'm not a market profile trader. I'm just a trader. And my worldview of how the market works and how I identify opportunities through the lens of auction market principles, how markets develop. There is a very consistent development process in all markets, not just the stock index futures. I don't care if you're trading Amazon stock or rough rice or gold or anything else. The same auction market process of development is in effect in all degrees of time all the time. So for traders of similar ilk, auction market traders, you want to look at whatever charting format you choose to use as a means to an end, not an end in itself. And that's how I use the market profile chart. And it's also how I use bar charts. So, the most important levels now from an auction market profile perspective, of course, it depends on the time frame you're trading, but on an intermediate term level, this is the profile view of the levels that are important. Now, this is the NQ. This is this upper key reference area. This is that secondary low that highlighted on the 30-minute chart. And we'll just run through each of these in case I forgot anything that I want to mention. This is the ES. Now, these are the futures markets. I apologize if I'm confusing you. I showed the cash charts earlier. These profile charts are the futures charts. Okay, here's the ES. You can see the levels on here. Here's the YM/Dow. This is the Dow future. You can see we're pretty close to the upper key reference area in the YM. And then the Russell that continues to be complex. You can see it's extraordinary how we continue to rotate around this general area in so many degrees of time. The Russell has been in balance since the end of January of this year. And one of these days, we're going to have an extraordinary trade above or below this upper and lower extreme. Right now, we closed on Friday just above really an important short-term key reference area. If I take, this is the September auction, this is the August auction, this is from end of January into the end of July. But if I take the September and August auction and combine them into one auction, which it really is, you can see it's just extraordinary how tight this going on 6-7 week auction is. So here we closed right here on Friday. So what I can tell you with certainty is that sooner rather than later, you're going to test or exceed the upper extreme of this 7-week auction. You're going to test or exceed the lower extreme of this 7-week auction. And that will be a very, very, very important signal as to a potentially quite explosive move through either the upper extreme or the lower extreme. Okay, let's take a look at the internals and specifically NYSE data. This is data that I've used for most of my 36 plus trading career. It is a blunt instrument. It cannot be rote traded. I give the same speech all the time because everybody wants everything to be binary, and it's not. It's contextual, and this is certainly contextual. Breadth, the price breadth relationship has a different behavior in a downtrend or an uptrend, and that's true across all degrees of trend. For instance, it becomes a little bit more binary, that relationship, that price breadth relationship, when you're in declines and when you're in advances. A perfect example of this, when you reach negative 2000, and this it doesn't matter if you're in a bull or bear trend, you're typically near at least a short-term low time-wise. Sometimes not price-wise, sometimes you'll get further washout, but on less momentum coming very quickly on the heels of that initial 2000 breadth reading. But recently, price and breadth have bottomed almost simultaneously, which is an example of the extraordinary bid that we have seen in this market now since March 2020. So if it isn't different this time, ultimately what we should see new all-time highs in one or more of the indices before we see last Monday's low taken out. Now, that doesn't mean we're going to go straight there. And as I put in the report, I would not be surprised to see some balance in here prior to trading higher. Part of the reason for that is this work and specifically breadth. We had a big expansion in breadth on the 22nd. I think that was Wednesday. So what usually happens, the typical pattern is that price will work itself higher and breadth will be lower and lower as price goes higher and higher until ultimately you get some sort of 2-3% pullback similar to the ones that we have had over the past 18 months or so. Guys, I hope you found this helpful. And again, if you did, please like it. If you have not signed up to subscribe to my YouTube channel, please do that. And if you are getting this through YouTube, and you are not getting my newsletter, please sign up for the newsletter. You can go to www.alexandertrading.com, sign up for the newsletter there, or just shoot me an email and I'll put you on the list. You guys have a great weekend.